The 2026 Tax Reset. How the IRS just changed your money math. 1. The big reveal. The IRS quietly dropped a tax bomb on October 9, 2025, and it's going live in 2026. The changes hit everything: standard deductions, income brackets, capital gains, and even how gold and silver investors get taxed. In short, the financial ground just shifted. So what does that actually mean? It means your paycheck, portfolio, and maybe even your retirement plan are about to play by new rules. Some changes are good, some sting a bit, and a few are, well, just confusing enough to keep accountants employed forever. Footnote: the IRS update isn't just a memo, it's a quiet restructuring of how Americans calculate what's left after taxes. 2. The standard deduction. Good news first. The standard deduction is going up. In 2026, single filers can deduct $16,100, married couples filing jointly can knock off $32,200, and heads of household get $24,150. Seniors get a little extra love, those 65 or older get another $1,650 if single, or $2,050 if married. And here's a curveball: there's a one-time bonus deduction of $6,000 for seniors starting in 2026. It begins phasing out once income hits $75,000, single, or $150,000, married. This bonus disappears after 2028. So what does that actually mean? If you're older and on a fixed income, 2026 might give you the best tax break you've seen in years, until it quietly fades away. Footnote: standard deductions are getting a boost, but the clock's ticking, especially for retirees. 3. The income tax brackets. Next up, the big one. Ordinary income tax rates. These determine how much Uncle Sam takes from your paycheck, pension, or side hustle. For single filers, income up to $12,400 is taxed at 10%, then 12% up to $50,400, 22% up to $105,700, and so on. For married couples, it's 10% up to $24,800, then 12% up to $100,800. Translation? The brackets are shifting upward to adjust for inflation, but not enough to make you feel like you're winning. So what does that actually mean? Your raise might push you into a higher bracket without really making you richer. It's called bracket creep, and it's the IRS's favorite silent tax. Footnote: income brackets rose, but not faster than inflation, making higher taxes feel like progress. 4. The capital gains twist. Now, let's talk about what investors really care about: capital gains. That's the profit from selling investments you've held for over a year. For 2026, if you're a single filer, any gain under $49,400 is tax-free. From there up to $545,500, it's taxed at 15%, and anything above that hits 20%. High earners with over $200,000 in adjusted income also face a 3.8% surtax, the net investment income tax. For married couples, the zero tax zone doubles to $98,900, the 15% range goes up to $613,700, and the same 3.8% surtax kicks in above $250,000. So what does that actually mean? If you're planning to sell investments, timing is everything. 2026 could make or break your after-tax profits. Footnote: capital gains remain the smart money tax, but only if you know when to sell. 5. The gold and silver catch. Here's the twist that precious metal investors often miss. The IRS doesn't treat gold and silver like stocks or real estate, it treats them as collectibles. That means they're taxed at your ordinary income rate, but capped at 28%. So even if you're in the 32% or 35% bracket, your metal gains stop at 28%. It sounds fair. Until you realize that means no access to the lower capital gains rates. In other words, your gold might shine, but the taxman still gets the glitter. So what does that actually mean? Gold and silver might protect against inflation, but not against IRS categorization. Footnote: precious metals are taxed like art, beautiful, valuable, and never fully yours. 6. The takeaway. The IRS isn't out to shock you, it's just quietly reshuffling the deck. Deductions rise, brackets widen, and the wealthy get nudged to contribute more. If you're strategic, 2026 offers a small window to reposition your income, harvest gains, or rebalance your portfolio before new thresholds bite. So what does that actually mean? This is your reminder to plan before you panic. The tax code may be written in ink, but your choices between now and 2026 are still in pencil. Footnote: the smartest move in 2026 isn't to complain about taxes, it's to outthink them.